Good morning, everybody. Welcome to today's 1Mby1M Strategy Roundtable for Entrepreneurs. 1Mby1M, as you know, is the first and only global virtual accelerator in the world. Our mission is to help 1 million entrepreneurs reach $1 million and beyond in annual revenue. In support of that mission, we do these free mentoring roundtables every week, and we have done 496 sessions as of today. Major milestone coming up, 500 sessions in September. Over 150,000 people have participated in these from literally around the world. We've seen people coming from every corner of the world and places where we don't really do any proactive marketing. So it's absolutely inspiring to see how people are finding the program from places like Ghana and Tanzania and so on and so forth. So welcome if you're from places where entrepreneurship has taken time to reach, technology entrepreneurship has taken time to reach. Welcome. We are delighted that you are here, that you're able to find us. Well, the event is being recorded. This and every single other event recording is available on our YouTube channel, 1M1M Roundtable. On Twitter, we're at 1M1M and at Romana. We publish a lot of really rich content. Hashtag 1M1M is today's hashtag for live tweeting. Remember, this is a roundtable, not a broadcast, so we want you to participate. For the time being, we want you to participate by public chat. Please set your chat to send to all participants, and then I'll open up the line for call-in in a moment after we're done with the scheduled programming. We are going to start today's session with a conversation with Julian Zimmerman, Managing Director of Reinventure Capital. Julian, welcome to the show.
Thank you so much for having me, and congratulations on your upcoming milestone. 500 episodes is a big one.
Thank you. We do these all the time. You know, this is 500 public ones, and then we have thousands of private ones, which are members-only sessions. So this is the, we have gone online way before coronavirus.
Well, it's a pleasure and a privilege to be here with you today. Thank you for having me.
Let's get acquainted. Let's get you introduced to our audience. Tell us a bit about you, your background, as well as about Reinventure Capital.
Sure. So Reinventure Capital is a Boston-based venture practice. We are a high-impact, high-return investment practice, meaning that our investment strategy has both impact and financial objectives at its core. And our specific impact strategy is around breaking the steep and persistent asymmetry in access to capital that plagues founders who are Black, Indigenous, and other people of color, and women of all identities. And so our fund is structured to invest exclusively in U.S.-based companies that are led and controlled, substantially owned and directed operationally on a day-to-day basis by those BIPOC, Black, Indigenous, and people of color and or women founders. And also specifically within that category, we focus on companies that are at break even and poised to grow profitably. And we do that because, first of all, we know that those are the companies that are positioned to become economic engines, creators of wealth and opportunity and value in the communities and the sectors in which they operate. And also we know from prior experience with the predecessor fund that those are excellent investments. So the predecessor
can be profitable
fund
level. You're saying they break even any. You want companies that are profitable at any level, whatever be the threshold, or is there a certain revenue level that you want them to get to before you get involved?
That's a great question. And because we have a cross-sectoral investment strategy, there's not a kind of set figure that applies across the board. So you can imagine, for example, that companies that are in health-related technologies and services might have different revenue models and business models underlying their profitability than companies that are, say, in digital media or infrastructure or fintech. They have significantly different underlying models and assumptions and cost basis and all the rest. So what we look for at that break-even point is that the founding team has validated the business model that is relevant for their sector, for the value proposition they are delivering to their customers. And that break-even point really represents the kind of jumping off inflection for them to go from validation phase to scale phase.
Got it. That actually gives me a good segue into the sector question. So do you do B2B, B2C, all different sectors? Is sector agnostic completely?
We are sector agnostic, although, as I'm sure you're aware, and many of your audience are also, I'm sure, well acquainted, there are some sectors that don't lend themselves well to a profitable model, right? So although we look at a lot of health-related companies, you cannot really posit a pharma company that would fit our model, right?
Pharma, biotech, semiconductor, these don't work in capital efficient models.
Precisely. And so we also see a lot of really exciting digital media, but social media doesn't really conform.
Sure.
And so we are less about sector or technology or vertical. We're not so concerned about that. What we are really keen to see is that the founder team has identified a value proposition that they can deliver effectively and profitably, and that has the potential to scale to a significant size. And we are in that sense really generalist investors. Where we specialize really is in assisting those founders we work with to think through the necessary steps in order for them, again, to successfully make that leap from the launch and validation phase into the scaling operation phase. And that's a tough jump to make.
Yeah. Now, you said you're all over North America. You invest all over North America, yeah?
U.S.
So I'm going to get to specific companies and examples from your portfolio, but
Sure.
Let me ask you, given your target audience, where do you source deals from? What is the strategy that gets you face to face with such entrepreneurs, the Black entrepreneurs, you know?
Well, it's an important question, Shramana, and it gets to one of the fundamental myths at the heart of the current incarnation of the venture sector. So we have this really deeply rooted, pernicious myth about there being a shortage of investable talent. You've probably heard VCs complaining about a pipeline problem. We have a pipeline problem. And what I say in response to that is we absolutely have no pipeline problem. We have a network problem. And the simple fact is that the vast majority of capital really is disconnected from the vast majority of entrepreneurial talent. And so for us, our deal flow cultivation practice is very much about a combination of outreach in the form of relationship building with early stage investors who also focus on our target founders, so folks who invest at pre-seed or seed stage, let's say, or peer communities of founders in the sectors or in underserved, underinvested geographies within the United States. We are actively in conversation with incubators and accelerators and other programs that provide services to our target founders. We also do our own scouting. So we go where the talent pool is rather than expecting them to come to us. And so we go to events like, for example, Black Tech Week and Spectrum and other events that are specifically for and by the founders we're seeking. And the sad fact is, most of the time, our conventional venture peers aren't there. And so it's actually not difficult at all to find really outstanding talent. We actually have way more high quality deal flow than we can engage. And moreover, as a result of actually making the effort to go find and meet and engage the founders we're interested in, we also enjoy inbound connections. People actively make introductions to us. We have founders who come to us and say, I have a term sheet from fill in the blank, very famous venture firm, but I would rather have Reinventure as my lead investor. So how long would I have to put them on hold in order to have a conversation with you and find out whether Reinventure might invest in my company? And that is, as you know, that is just an extraordinary validation of the value of creating those kinds of relationships and making the effort to reach out to the founders we're interested in.
Okay. Two questions. One, first, let's start with the fund size and check size.
Sure.
How big a fund and what kind of check sizes are you writing?
Yeah, so Reinventure, the fund is a modest fund. This is the first fund under the Reinventure banner. It's a successor to a predecessor fund under a different banner. It's a $50 million fund, $50 million US, investing solely in the US. And we invest anywhere between $500,000 and $5 million per company, typically on average around 3 per company. For first investments, we would frequently invest towards the bottom of that range to leave room for a follow-on.
Okay. And I want to get into some examples from your portfolio, including how you met the founders. What is it about the founders that you resonated with? Before we do that, though, I would like to understand the DNA of your background and your partner's background, so that I can connect the dots of why you're investing in the kinds of companies you're investing in.
Sure.
Besides the demographics.
Yeah, absolutely. So let's start with my senior partner, Ed Duggar. Ed is really one of the pioneers of impact investing here in the United States, starting in the 1980s. So long before we even had this phrase of impact investing, and long before it was a widespread discussion among investors, really of any category. And he is also one of the very few Black statesmen in the venture community. He was formerly the president of a practice called Urban National Corporation, or UNC Ventures, based also here in Boston, that really was a path breaker intentionally in investing by design in undervalued, underinvested founders, focusing primarily on Black and brown founders, and developed quite an extraordinary track record. So the UNC Ventures fund returned 32% IRR harvested to its investors, which is top tier performance for any venture strategy. And its portfolio was majority success, so also by design. So 2/3 of the companies in that portfolio contributed to the financial return. And of the remaining third, about half, or about a sixth of the portfolio returned at least some or all of the invested capital, but did not contribute to the return. And so it's almost an inversion of the prevailing venture practice, both in terms of the makeup of the portfolio and in terms of the return profile of the portfolio. And Ed was quite appropriately a kind of media darling for a time because of this distinct differentiation from the prevailing venture community. And yet, very shortly after that fund, the UNC Ventures Fund, was harvested, that story kind of fell into collective amnesia. It was so different than the story we are accustomed to hearing and reinforced that it sort of got lost. And so Ed decided that it was, a couple of years ago, Ed decided that it was time to do the same work again and recreate that compelling example. And it was my great good fortune and honor that he sought me out to recruit me to join him in that, to launch Reinventure together. I started out in a very different way than most people who find their way into venture investing. I never aspired to be in the venture capital world. I started off as an aerospace engineer. I went to MIT when I was 16 because I had wanted to be an astronaut since I was 12, and I thought that that's how you became an astronaut, was you went to MIT and you studied astronautical engineering, and it's not the worst idea, but it's a bit naive. So, but as a teenager, this was the way I thought about it, and so I went to MIT and I did major in astronautical engineering, and I double majored in literature, and I had a wonderful first career. I spent 14 years working for a tiny little company here in Boston. I joined in the 1980s, shortly after I graduated, and this was also before we had the kind of cultural phenomenon of entrepreneurship, right? So sure. This was a point in time when if you were an aerospace engineer, you went to one of the big aerospace houses, one of the, enormous behemoth companies, Boeing. Yeah. You name it. And so my friends and classmates and family members thought it was quite odd and even a little bit alarming that I was employee number 7 at this tiny little upstart company that had just been formed. And many people, I think, very well-intentioned, gave me advice to, please reconsider and go get a real job. But it turned out to be really a phenomenal experience, not only because I worked with astronauts and cosmonauts and NASA and the Canadian Space Agency and the European Space Agency and the Soviets and then the Russians and the Japanese, and I worked with scientists all over the world, and my team and I set precedents, and several of them have still not been surpassed, and accomplished amazing things and won awards, and were in neutral buoyancy and parabolic flight simulations and at mission control to say go, and at launch facilities to see launches, and you name it. It was just an amazing adventure. And I was ultimately a finalist twice in the NASA astronaut selection process.
Wow.
Which was as close as you can get. But I was ultimately not selected. And that was both a signal honor and also, a huge disappointment, a kind of heartbreaking end to a spectacular experience. And it was also, in addition to all of that, it was a phenomenal hands-on training in not only entrepreneurship, because we were growing this tiny little company in an industry dominated by giants, and our company was all about doing what the big companies couldn't. It was also, for me, a really excellent grounding in a discipline of looking at the status quo and the established thinking, and asking questions about where is that missing something? Where are there paths and opportunities for us to come up with substantially better solutions, and to actually do that and prove it. So at the end of that run, I had more adventures and more professional challenges and experiences than many people get to enjoy an entire working life. And I had done everything I could do to achieve my aspiration to be an astronaut, and I hadn't gotten to have that particular dream fulfilled. And so I really felt that I had, again, a great opportunity and privilege to think about what else would I care about doing as much as serving the global science community. And so after really thinking and looking around and talking to people and exploring for a couple of years, in the early 2000s, I ended up co-founding a clean energy company. And this is before the clean tech boom. My colleagues and I, my co-founders and I, spent about 2 years pitching more people than I care to remember, many of whom said to us some version of, no one in their right mind will ever invest in clean energy. And we were called hippies and communists, and I was personally told that I was delusional. And once again, well-meaning people told me I should really rethink this madness, and I should, go do something much more sensible. And fortunately, they turned out to be wrong. And as we all know, we have now had a boom and even a somewhat of a bust. But the clean energy era is now unfolding.
Sure.
And so after a couple of years of really getting nowhere, that company did actually become one of the real path breakers in the heavy industry part of the world, serving fixed base power generators and heavy on-site power generators, and eventually changed the conversation in that sector from absolutely no way we are ever going to contemplate clean, green kinds of propositions to this is really the future of our sector, and this is the way we go forward. And that company did eventually have mainstream, well-known investors. It took us a long time to get there, and also, that company was one of innumerable companies that were killed off in the extinction event that occurred when the markets imploded in 2007 and 2008. And so once again, I had this amazing experience of being at the forefront and accomplishing something incredible with my colleagues. But, the ultimate success was outside our control. And that was also an excellent learning experience to realize that, there's a certain amount of ego that you really have to invest in any new enterprise. But there's also, there's a limit to, how far your ego will take you. And so as a result of that, I became very actively involved in the innovation and entrepreneurship community, not only here in the greater Boston area, but much further afield. And I was fortunate to be involved in a bunch of things outside the U.S. as well. And I was a mentor and a judge for competitions and an advisor to many companies, a board member, sometimes consultant, and I joined a few as an early team member. And over the experience of advising and working with dozens and dozens and dozens of founders, I came to form, much to my own surprise, my own investment thesis. And I really saw myself as somebody who was on the innovation and operations side of the table, not on the capital side of the table. And so I told all sorts of people I knew about this opportunity I saw that I didn't see a lot of investors recognizing. And once again, people said, I think maybe you should just, stick to what everybody else is doing. That seems a bit far-fetched. And so I found a co-founder, and I raised a tiny little bit of money, $2 million, and made 4 seed stage investments in 2013 and 2014. And now we would think of those as pre-seed because, as we know, the landscape keeps shifting. And just as I was in the process of kind of tying a bow around that and preparing to think about what else would I do next and what kinds of things, again, would I apply myself to that I would care about deeply. It was my incredible good fortune that Ed came to recruit me to join him in launching Reinventure. And so, having been a co-founder myself and having worked with dozens and dozens and dozens of founders, not only was I intimately acquainted with the ways in which the mainstream venture community discounts and dismisses founders who don't resemble Mark Zuckerberg, but I had also seen an enormous population of founders who were doing all kinds of interesting things that, regardless of their gender or ethnicity or city or any other category, were just being routinely missed because they didn't conform in other ways to the prevailing venture expectations. And so, from personal experience and from years of observation and involvement in the community, it was abundantly apparent to me. It was patently clear that there was a compelling investment opportunity with the Reinventure strategy. And moreover, how many times in your life do you get to have the opportunity to work with someone of Ed's stature? And so it was an absolute no-brainer to join him in doing that.
You hear me?
You're back. Yes, I lost you for a moment, but I see you now, and I hear you.
So what I was saying is that if this was very helpful. So you were very comfortable with technology. That's the main conclusion that I got out of this. Let's start with what companies have you invested in from the MIT ecosystem? I'm an MIT alum as well. I'm an electrical engineering and computer science grad from MIT. So a grad student, actually. I was in the PhD program. So if you have any, let's talk about those first.
Sure. So first of all, for the other MIT nerds out there, shout to it's course 6, shout to the course 16, and shout to course 21. We have in this fund, this is a newly launched fund, so we don't yet have any fellow alumni we can point to in the fund. But I would like to seize on your background, Shramana, to kind of tell an illustrative story about the kinds of founders we see as compelling, and then I will talk about some examples of companies we are watching very closely and contemplating for near-term investments. So. A couple of years ago, I had the privilege of speaking at the MIT Women's Conference. And by the way, someday I hope that we no longer have the need to have such events, but it's an important event to gather together women who are current and past members of the MIT academic community. Because the sad fact is that they don't enjoy the same access to capital as their white male peers, even though they are from MIT, even though they are holders of advanced degrees, in many cases multiple advanced degrees, even though they have patents in their own names, not in somebody else's that they've licensed, but their own patents, even though they have in many cases significant market traction already. And at the MIT Women's Conference, I was approached by several women, and the conversation we had is unfortunately a conversation I have with far too many founders from MIT and from many other alma maters. Namely, I have the degrees, right? I have master's degrees. I have a doctoral degree. I have postdocs. I have, I have formed a really spectacular team around me. I have customer demand. I have, contracts that are waiting to be filled. I have significant inbound interest from customers we haven't even marketed to, just like you haven't even marketed this program and you have audience showing up. And I cannot get a meeting. I can't be taken seriously. Or when I do meet with a venture capital partner, the questions I get are about my children or about my husband or about, my personal life or about, who's coaching me or who's helping me. And so what should I do? And unfortunately, the fact of the matter is that even though a significant fraction of investment capital is concentrated in the neighborhood surrounding MIT, 02139, there's a very narrow lens for the kinds of founders who are considered investable. And shortly after that conference, I had a conversation with someone at MIT who said to me, well, surely there is not enough qualified talent for an investment strategy like Reinventures. And I said to him, well, look around you. This was in June. And I said, MIT just had commencement, and the Institute saw fit to confer degrees and in many cases advanced degrees on women, on people of color, on people who are, born outside the U.S., who are citizens of other nations, people who are not, U.S.-born white men. And he said, well, yeah, but that's not really enough. And I said, well, okay, but so did Harvard, and so did all the other universities in the area. And by the way, there are other universities too who also just recently conferred degrees on their students and graduate students and postdocs. And he really found this very hard to grasp, even though he himself was based at MIT and interacted on a daily basis with that phenomenally talented and incredibly gloriously diverse population. And so that really is indicative of the kinds of unconscious blindness that we see getting in the way. So an example of a company we like very much and we are tracking. We met this company in, they're based in Baltimore. The company is called Warrior Centric Health. And we met them by way of outreach. And they are founded and led by all active duty service veterans. The founding CEO is an African-American man, highly decorated in his military career. The chief medical officer is an African-American woman, also highly decorated in her military career. The chief operating officer is a white woman, again. They saw several years ago, not only from their own firsthand experience in the military and veteran communities, but they also saw coming out from the NIH designations based on this is in the United States, the National Institutes of Health. The NIH had recognized that veterans and their families compose 25% or more of civilian hospital patient populations and are treated as civilians in the United States. When you return from military service and you return to military life, you have private health insurance through your employer like all other civilians, and so you are not recognizably different from other patients. And yet, veterans and their families have very different health trajectories and concerns. And so this presents a real challenge for their own health and quality of life, but it also presents a challenge for hospitals who don't necessarily even know how to recognize those patients, let alone understand their health concerns and trajectories and to treat them appropriately. So this team developed a new standard of care around veterans and their families under guidance and grant funding from the National Institutes of Health and from the United States Department of Defense. They validated that with the medical review and study, and they prepared a platform to roll out standard of care and certification for hospital systems, for all of the medical staff in hospital systems. And so they rolled out the initial pilot with, I think, half dozen or a dozen hospitals in 2019. And it was so enormously successful Chief medical officers of the hospital systems loved it because it improved their patient outcomes. The chief financial officers of the hospital systems love it because it reduces their costs from readmissions and retesting and ineffective care. And of course, the general counsel loves it because it reduces their exposure to legal risk for malpractice, right, or mistreatment of their patients. And so Warrior-Centric Health was recognized with the Best New Product or Service Award by the American Hospital Association. They're in process of rolling out now this platform to a $4 billion market in the United States alone, which they have pitched many times to the mainstream venture community, which doesn't see it as a real opportunity. So partially because of who the founders are, they have had the same kinds of experiences that, unfortunately, so many founders who are, again, not the usual suspects encounter, but also because people have said to them, like, well, how can this even be a business? And so both the founders themselves appeal to us very much because these are incredibly accomplished, very knowledgeable, very capable, very disciplined founders who have demonstrated to us that they not only understand their customers and what they need, but they have that validation from their customers. Yes, this is important to us. We want this. And they have a profitable business model. They're not profitable yet, so this is why we're tracking them and watching them with great enthusiasm and interest. When they get to that break-even point, we hope to be, first in line and first on their side as well to be able to work with them to grow that business.
Very good. Well, wonderful conversation, Julianne. This is good insights into a corner that you have identified as underserved, and that's always what we look for in positioning, right? And both in product positioning as well as in fund positioning.
Exactly.
So let's listen to an entrepreneur. I know that you're going to stay on.
Yes.
And Artem, I see your question. We will answer your question in a bit during the Q&A, okay? So hang on. And before we dive into the entrepreneur pitch, I want to set expectations for if you're pitching today as well as if you're pitching in one of the subsequent sessions. This is a safe working session. We are completely on your side. There is absolutely no other agenda besides trying to help you become successful, remove your roadblocks, brainstorming about strategy, about your venture. So no need to be defensive, no need to be nervous. Just, relax and talk about what is it that you need help with, and we'll try to brainstorm and give you some input. If you disagree with the feedback you get, that's fine too. It's your venture. You decide how you want to play your hand. Just remember one thing, not all businesses can raise money. Not all businesses should raise money, and raising money doesn't guarantee success. There are certain business models and certain styles of businesses that need to be built organically in more of a bootstrapped way. And you've heard, if you've been here before, you've heard in some prior sessions we've brought on alternative financing opportunities for people who do not necessarily fit the venture capital model, et cetera, et cetera. So we will try to connect you to the right strategy that includes financing strategy. Scribando is the company that we are going to listen to next. Albert Griesmayr is the entrepreneur. Albert, please unmute your line and tell us what you're doing.
Hello, Sramana. Thank you so much for having me. It was very interesting. From Austria, Vienna, Europe.
All right. Fantastic.
Yes. So it was very interesting to listen to you. Thanks for all the insights that I was already able to acquire during the call so far. And yeah, I'm happy that I can talk about my company and pitch it. And if you are ready, I will just go ahead.
Please go ahead.
Okay, great. So my company is Scribando, and it's a book publishing industry monitoring company. And the reason why I started it was because already 6 years ago, I have to apologize. I'm at home today, and my little kids, they were now for 40 minutes away, and now they're coming into the room. So, yeah. So my apologies. They will soon disappear. You might know there is a video from a CNN reporter where the kids suddenly come in. So that's pretty much the same right now.
It's quite all right. That's all.
My apologies for this. So yeah, very quickly about my motivation for Scribando. So I'm an author myself, and when I wrote a book, I was actually one of the early self-publishers. And so I saw in the market that it was very difficult to acquire the knowledge how to successfully publish a book, and especially related to the marketing knowledge. And so I decided already 6 years ago that I wanted to do this company, but I had in between a very good offer from an auction house to work there as head of digital. So for some years I was doing that. And 1 year ago, I decided that I want to go back to Scribando because I still see that there is a problem not solved. And the problem that is solved, and let's go to the next slide. Samana, thank you. Is that the market has become very competitive. There are, due to self-publishing, many authors in the market, and there are many technological solutions to help them. However, the real angle to help them is not technology, it's actually education. So what they need to know is how to publish successfully and to have access to the latest knowledge for what is needed. So let's go to the next slide. I hope you can still hear me. I hope it will soon get better. My apologies.
Don't worry about it.
Very sorry for that. So what we are doing is that we are keeping authors up to date with the latest book marketing developments and opportunities. And next slide, please, Ramana. And there is a membership, the Scribando membership. It works like a monthly subscription service. And for $4.95 per month, authors get access to this knowledge. And we do 3 things primarily. So one is they get monthly book world updates that inform them about the latest trends, latest news in the market. Then they get a weekly update as well. And they have access to the member area that shows them basically around the clock. What are the latest news, latest trends? There is an event calendar on there. There is access to a Q&A, to a knowledge base. And so it really acts as a knowledge hub. And next slide, please. And yeah, and so I started this product now new, at the beginning of 2020. We have 48 paying customers to date, and the feedback is actually very good for the service, so I'm happy with that. But what I noticed is that the sign-up rate is not as high as I was hoping for, so this is something that I have to work on. And before I go to my questions, maybe quick insight on the current acquisition process. So on one hand, I am a manager to one of the largest LinkedIn groups for book publishers with more than 60,000 members. And so once a month, we also share the book world update within this group. So this is one channel where we acquire authors. And the other one is that we are sourcing every month new authors publishing books on Amazon and just contacting the ones where we believe that we are a good match. So this is what we are doing right now. Next slide, please. And my main goal with the service is to get to 1,000 customers. Yeah, of course, I don't want to say as quickly as possible because it always, has costs, yeah, to be speedy. But of course, it should be quick because I know it builds an important financial base for the company. And what is also important, thank you for going to the next slide, is the standardized income. Because right now I'm also a book marketing consultant and I have personal clients. So the company has revenue, but what I noticed, and you will be very familiar with that it's a huge difference between being able to get income from a standardized service where you don't need to exchange your time against money all the time, versus on the other hand, come here, Alexander, come to me. Versus on the other hand, come here, Alexander. Yes, to have this trading against money. And,
Albert, here's my question that I need to understand to be able to answer your question. Why should I pay $4.95 for this? What am I getting? And since you're here, you know my background. You know that I've published 13 books. They're all in the entrepreneurship domain. What can you tell me that I don't know already? Through your newsletter, that's your service.
Alexander, komm mal her zu mir. I'm sorry, I'm trying to talk to my son so that he comes to me. Maybe I can call him down. So the most important thing is that when you have a team or someone that is very close to the industry and really monitoring what's happening, there are a lot of opportunities that you see. For instance, I give you an example right now. There is a new service on the market for getting book reviews. And it's a very, as an author, Simona, you will know how difficult it is to get book reviews. And so with this service, it has gotten much more easier. And so we are sharing this knowledge so that, my apologies. I hope I can finish this call. If not, I have just, quit the call. I'm very sorry, but I hope it will work out. So for instance, we are sharing then this service with our members. So it's very much about time-sensitive information and insights that you only know if you're really close to the market and really processing what is going on, on a daily basis, weekly basis. And this is the kind of work that we do for authors because we know that they are busy. They don't have the time to monitor the market and to have access to the latest developments and opportunities.
I see. Okay. So your question is, what are the thoughts and suggestions for growing to 1,000 customers? And you said you have about 45, 50 customers now.
Right.
The one thing that you should not have to do is recruit these by hand, one by one, because that's not scalable, right? At $4.95 per month price point, this is not a profitable way to build a business. So you're going to have to get these people to, sign up for your product without your having to prod them too much. So, the one that strikes me as perhaps the most reasonable one is if you're already publishing your monthly newsletter on this group that you manage, publishers group, and you are growing the publisher group already. So that's are the people converting by themselves through that group, or do you have to touch them and do some high-touch selling to get them to convert?
Actually, we did not did too much on this group apart from sharing the updates on this group. And then, they have access to, let's say, 80% of the insights, but the insights are hosted on our webpage, and then they decide, to become paying members. But maybe one note to this group: this is not a group that I built myself organically. It's a group that was already existing and that I became a manager of 4 to 5 months ago, because
that shouldn't matter. The question that you need to monitor for this group as well as other groups where publishers are hanging out in social media, whether it's on Facebook or LinkedIn or wherever, is if you post these monthly insights, are people engaging? Are people, responding and going ahead and subscribing to it? Because you're going to have to use content marketing somehow to get people to convert on their own. You can't, for a $5 product, $5 a month product, you cannot call people and make them convert. That's just not profitable. It's not scalable. I would encourage you to look at Quora. Quora is a very interesting content marketing platform where you can get to very target audience. So if it's book publishers and it's about book marketing, if you start answering questions about book marketing in Quora and then structure your content in such a way that they then are encouraged and invited to come into your site, that is a credible content marketing strategy. So I would suggest you try that, and that may get you to your 1,000 number if you can find good questions with lots of followers that are relevant to your topic. Have you tried Quora?
I know the platform, of course, but I've never tried to actively engage there.
I think Quora may be the next thing that you should explore. Do you have any ideas, Julianne, that you want to share with Albert?
Yeah, so first of all, thank you for sharing this with us, Albert. And
You're welcome.
I actually have some questions I would just offer you to mull over. Not that I expect you to answer right now, but first of all, and I ask this of all founders I meet with, what is your personal ultimate objective with this company? So why is it worth it to you to put your effort into growing Scribando? And what will make that effort a success for you personally? So, people will often answer like, oh, I need to reach a certain level of revenues, or I want to, have a certain profitability. But you can achieve those numbers in any number of ways with any different, many different kinds of businesses that may or may not actually be satisfying to you as the entrepreneur. So if you can get as clear as possible about what it is that is going to be success for you, that's a huge help in terms of enabling you to make strategic decisions between one thing and another thing, right? The other thing I would really try to get really clear on is, what is the value proposition in your customers' minds? You have a hypothesis that it's information and timely information that enables them to find a path to market with their writing. And that may be spot on, but maybe it's something else. Maybe there's a different value proposition. And again, this is something that all founders encounter, right? That especially those of us who build something that we care about, we are selling a solution that may or may not be the solution somebody else is looking for, right? And so you start off as your own first customer, but very quickly you have to learn whether you are actually your customer or whether somebody else with a different value proposition is your real customer, right? So particularly since you have this really marvelous community that already exists, I think I would want to find out, what does that community feel like it needs and wants that doesn't exist? Is it timely information and insights, or maybe it's something else? And maybe it's just a matter of the way that you're presenting the Scribando offering, or maybe there's actually something else that you could provide because of your knowledge and expertise and experience and connections that would answer their wishes, their unfulfilled wants, right?
So on that point, actually, I'm listening to you, Julian. I will say what the answer that you gave me as an example of the kind of timely information you provide actually was quite compelling to me, because anybody who has marketed books knows it's tremendously difficult to get reviews. So if there is, if there is something that can address that particular problem, that is of value to me. But then you need, on a weekly basis, on a daily basis, you need such nuggets, such insights that people are going to subscribe to you for, right?
And not only that, but share it with their friends and gush about it to the larger community. So just like you want book reviews to convince someone who looks at the dust jacket to buy a book, you want those testimonials as well to convince your customers to subscribe.
All right. Well, try some of the inputs that you got here, and then I'm going to explain in a moment how to use 1 million by 1 million if you need ongoing help. Before we do that, I have an ask from the community, if you're listening. If you like what we're doing here, as you can see, it's a very constructive, critique, input kind of program. Now, if you've been here before or have listened to recordings, you also know that we have no qualms about contradicting people's assumptions. So that's something that is not always easy to take. If you come here, please be prepared to be contradicted. If you're assuming something that we don't agree with, we will tell you. It's not a place where you come to get a pat on your back. That's not what we're here for. So if you like this approach, this candid, honest approach, by all means, refer 1 million by 1 million to serious entrepreneurs who are looking to build serious companies. Resource-wise, everything is at 1Mby1M.com. You will find a terrific blog that a lot of entrepreneurs have just learned by following the blog, and I keep hearing from them that all they've been doing for years and years and years, sometimes 10 years, is just following the blog. The blog has been around since 2005. The Entrepreneur Journeys book series is based on our Entrepreneur Journeys case studies on the blog. We published 12 volumes, and they are case study-based books, 12 to 16 case studies each. You can start there as well. These roundtables happen every week, and they're free. You're very welcome to come back as often as you want to listen to recordings. The full acceleration program is 1M by 1M Premium, where we offer you extensive methodology guidance, a full curriculum, help with business development. Our entire Rolodex, which is massive, is available to our premium members. We help you with strategy consulting, which is similar formats as these, but we have them in very frequently, and you can come and talk to me weekly at those sessions. We help you with financing. We have a terrific network of investors, and we also help you with our clout in the media. I encourage you to go look at the self-assessment. It's a questionnaire that investors want answers to. So try to apply these questions to your venture and see if you can answer these questions. If you get stuck on methodology elements, go to 1M by 1M Basic, which is our curriculum-only option, and that will help you plug those methodology gaps. The first-time entrepreneur's journey is a tremendous learning curve. You're going to have to somehow or the other, do that efficiently and get to the top of that learning curve so that you can float more smoothly in the entrepreneurial waters, if you like that metaphor. Anyway, go dig around on the website. We have described everything at great length. what to expect from premium, basic, FAQs, video FAQs, a full description of the curriculum. It is a case study-based curriculum. We have over 1,000 successful entrepreneur case studies, 100 plus unicorns, 400 plus venture-funded companies, another 400 plus bootstrap companies. So it's a very comprehensive body of work that you can learn a lot from. And you basically get to stand on the shoulders of people who have done it before. Our methodology is lean, capital efficient bootstrap startups, the same constraints that Julianne talked about earlier of not being able to do pharma or biotech or semiconductor, which are capital intensive ventures, applies to our companies as well. We can't do heavily capital, intensive ventures. But within our range, where it's generally bootstrap first, raise money later philosophy, by the way, no, raise money not at all is also a viable option, which is fine with us. We don't force you to raise money. So that's it. In August, we have 3 more free roundtables. If you want to pitch in one of these, please register and Maureen will send you instructions. Artem, let me answer your question in this context. You're asking questions about a particular venture, which I don't have enough information to answer. So I would recommend that you book a slot in one of these upcoming sessions, and I will work with you specifically around your idea, your situation, etc., and guide you accordingly. Remember, our work is only IT and IT-enabled services. So we do healthcare IT and digital health, but not biotech or pharma. We do agricultural technology, so ag tech as the field has come to be known, but we wouldn't necessarily do food products and agricultural products and so forth. So that's a filter you should apply in deciding whether this is the right forum for you or not. We also do rendezvous online on LinkedIn Live, Facebook Live, and Twitter Live on Tuesday mornings at 8 a.m. Pacific time. Again, anybody can join from any part of the world, and we do get an incredibly diverse audience. I'm actually fascinated by just the geographical diversity of what we are getting across all our different platforms. So it's been really fascinating. We're touching well over 500,000 people, and it's, my LinkedIn following has grown beyond 430,000 people. So it's just really, really cool what's happening. And we are going to be here. I anticipate that we're going to be here for a long, long time. So we can go to questions. Anybody who has questions is welcome to ask. And very, very happy to, answer anything you would like to know. Jennifer Lipgau is saying, thank you for bringing the event together. To all, please keep well. Yes, things are weird everywhere. I was just reading a Financial Times article this morning. In Europe, things have started going up again. Spain, led by Spain, actually. In the Balkans, in Eastern Europe, there is a surge going on and so forth. So nobody, even if you think that your town, your city, your state has got or your country has got the virus under control, it's not necessarily true. The minute people start going to bars and partying and, getting together without social distancing and masks, things go out of control again. It's very intellectual, and what I see is people are not willing to put the intellectual effort in understanding what this virus is. You can't see it, so you have to understand it conceptually. Our world of entrepreneurs and venture capitalists, we know how to deal with concepts. Conceptuals is our strength, so we're doing well. The Bay Area is actually doing pretty well, but you have to understand what the hell is going on. Those of you who would like to ask questions about the 1M program, please contact Irina Patterson. Her email is irina@1M1M.com. Anybody else? Any other questions? Artem, I'm glad you're going to register as a panelist next time, and I look forward to working with you. Well, Julianne, thank you. That was really wonderful. Everything you shared was really enjoyable and informative and inspiring, so great.
Thank you very much, and thank you to this community for being so present and enthusiastic and committed to helping each other. That's spectacular.
Gwendolyn Williams is saying you're interested in the business idea I promoted regarding in-home healthcare. Okay, well, start working on it, and if you want help from us, come, join the program, and we'll shepherd you through that process. So what she is referring to, Gwendolyn, is if you go to our blog, we are publishing a series called Post-COVID Startup Ideas, and I'm writing my ideas based on my observations of the post-COVID world. So I think we've published 6 or 7 of these ideas, and Gwendolyn, it sounds like, has read one of them based on home-based healthcare, and she's interested in exploring that. So we'll be very happy to work with you, Gwendolyn, to shepherd you through that. All right, folks, I don't see any other questions, so we will wrap up for today, and we will see you either Tuesday morning, 8 a.m. Pacific time on LinkedIn, Facebook, or Twitter live, or we will see you on Thursday at the Free Public Roundtable. Thank you very much for coming. Bye, Julianne. Thank you for coming as well.
Bye, Shamana. Bye, everyone.
Thank you.
Bye, Albert.
Thank you.